Yeah. Two. Yeah. Aye. I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is heating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it, yeah. In the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Led the broad days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game, yeah. Ay, all I really wanted was the money in the pocket. Got over money, but the money ain't a topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner there looking old so fresh, cold, clean. You see that thing, man? Take that picture for your mom and them. And guys, welcome to another edition of Real Estate Friday. Just going to be your partner today, man. Cliff is out of town, handling some business, but it's all good. Your day has got better because you get to see me. It's all good, baby. I'm looking clean today, y'all. But it's all good, baby, y'all. Welcome to Real Estate Live today, guys. And guys, you know how we do it every single week. Did we get the bag? Yes, we got the bag. Did we have to fight for the bag a little bit this week? We did, but we still got the bag, y'all, all right? Whatever you do, go get that bag, y'all. But anyways, guys, let's jump into this thing, man. You know how we begin it every single week. Guys, we get in and we get out, guys. We're going to look at the current market analysis, and we're going to look at something that the Fed chairman actually said, guys. So we got to widen the circle real quickly. Bring in our people from Valuetainment real quickly, man, and we're gonna see what he's talking about on this, man. Let's see what our people talking about on this, man. And I want y'all to listen clearly and distinctly to what the Fed chairman actually says, guys. This is what's going on in the current market. Every week is changing, so you have to revisit this again. Here we go. Let's get it in.
The economy. First things first. Tom, Fed chair sees long way to go on inflation fight. This is a New York Times story. When you turn on the news, you'll see Kramer saying, it's back. All these fearing and all this, it's done. Everything's great. And then the debate's like, well, listen, it's only 7 stocks that are driving the market. No, stop being pessimistic. Things are great. Look at what's going on. They're not raising the rates anymore. Here's what Powell says. Powell addressed lawmakers stating that the United States has a long way to go in tackling inflation. Powell emphasized inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The Fed's recent decision to keep interest rates unchanged after a series of increases does not indicate victory over inflation. Powell explained, given how far we've come, it makes sense to move rates higher, but to do so at a more moderate pace. We compared it to slowing down as you get closer to your destination.
So real quickly, guys, a couple weeks ago, he talked about pausing the rates. Now he's talking about, again, continuing to raise the rates, guys. So hold on now. He's changed his tone a little bit. This happened on Monday or Tuesday this week. So this is not nothing that happened 2 months ago. This happened this week. So let's keep going.
Destination, seeking a delicate balance and cooling economic growth without overdoing it. The central bank's economic projections suggest the possibility of two more point rate increases this year. So, Tom, when you hear...
Hold on. So we got 2 more quarters of rate increases, guys. He just said last week that he was gonna pause to see what breaks. Now he's changed his tune this week and was talking about, hey, we're gonna raise it. We're gonna do a rate raise for 2 more quarters. Man, I did say, guys, I will not be surprised if the rates go 9, 10, 11%. Watch.
When you hear the story, you see where the S&P's at. You see where the market's at. Are we done with the market crash? Should we still stay paranoid? Are these rates done going up? You know, are property values going to go up? What's really going on with the economy?
Okay. Well, I want to encourage everybody to think of it this way. Think of the economy right now in 3 chapters.
Okay.
Chapter 1 is the financial economy. You look up and you see the stock market doing good. Oh, the S&P 500, it's not far off from an all-time high.
Yeah.
Why the bounce back in tech stocks? The things that are driving that are much different than the rest of the economy. And I'll bring it up at one point. Do you remember all the people that were laid off by tech?
Well, listen.
Those people represent expenses.
Yes.
So now these tech companies have less expenses. Some of them haven't seen revenue up a lot, but if you have the same revenue and less expense, you have more profit.
Yes, you do.
The stock price goes up. So that's what's going on. It is tech driving the stock market. Now that economy doesn't translate to the personal economy. Because for those stocks to bounce back, what did we just talk about?
Yeah.
A bunch of layoffs. So there are people that are hurting. And we're going to talk a little bit later about amazing things that are going on in commercial real estate and housing in California as a result of that.
That's why I'm saying I'm always, guys, don't listen to what someone is telling you. Even me, even me, guys, look at the fruits. If someone is saying one thing, look and say, okay, so does what they say match the fruit or what's going on around what they're saying, if that makes some sense? So if someone is saying we have a roaring economy, guys, here's what you got to begin to do is say, okay, what are the remnants of a roaring economy? It's real simple. And if the remnants are not matching the roaring economy claim, we ain't got no roaring economy. Well, let's keep going, guys.
So the financial economy is one thing, and you see it at the stock market. The personal economy is quite another. And we just talked about how layoffs are impacting people.
Yeah.
Now you step back to the housing economy, which is directly connected to the personal economy.
It is.
Everybody needs a house, whether it's rent or whether it's buy.
Preach it.
And right now, the Fed is still impacting the personal economy because interest rates aren't going to come down, allowing people to buy more houses for a while. And the Fed is saying, we think it's slowing down, but they are probably going to raise the rate in July and then skip and then raise the rate in October. What that means is this 7% mortgage we're seeing right now, good credit, 30-year fixed is still 6.75 to 7 right now. That's probably not going to change, which means you're going to still have pressure on housing. So what's going on?
And also, guys, on the conventional side as well. Conventional is meaning non-FHA loans. These are QM, qualified mortgages, right? Homestead mortgages. The conventional 3, 5, 10, 20% down. The rates, guys, are 9 to 10% with good credit. 9 to 10%. So you're putting more money down and paying a higher rate still. Come on, guys, let's keep going.
Going on. Remember, you're actually seeing 3 pictures at once.
Yes.
You're seeing the stock market, you're seeing the housing market, you're seeing the personal market.
Yes.
So, but here's a part, Tom, that I gotta bring this up for the real estate people because they're giving this argument, and you got to give them credit. So on page 17, if you want to go to it, housing shortage fuels price bidding wars at homes for sale hits record low. Housing shortage fuels bidding wars as homes for sale hit record low. U.S. housing market faces a record low inventory of homes for sale with 1.4 million available homes in May, sparking intense bidding wars. Redfin attributes the shortage to homeowners feeling trapped by rising mortgage rates, resulting in 7.1% year-over-year decrease in home inventory. In May, 37% of homes sold above listing prices, raising concerns about escalating bidding wars. New home construction reached a 3-decade high, driven by the motivation of builders to meet demand amid low existing home inventory. And then at the same time, U.S. housing starts surge most since 2016, talking about what's happening there in May. All of a sudden, the largest margin since 2016 with a 21.7% jump to a 1.63 million annualized rate. Surprising all economists' projections. Single-family home building also rose by 18.5% to reach an 11-month.
Now, the natural question to this is what they're going through when it comes to new construction is going to be, how is new construction kind of surging a little bit? They're going to answer that question in a second.
Hi. When you see these numbers, what is this telling you?
So there's an interesting puzzle to break in here, but it'll make perfect sense with a few simple points. Point number 1, when they say 37% of homes sold above listing prices, they don't tell you that was the fewest number of homes sold in 4 years. So 37% of the fewest homes sold.
Yes.
So there's actually not a lot of sales going on for one simple reason. Vinny, if you had a 3% mortgage and you say, wow, maybe I'll sell my home and make $300,000 on it versus what I bought, then what? Then what do? You have to go get a 7% mortgage on your new house or a high rent or lease price if you want to do something in the interim. You're not going to do that. What are you going to do? Stay in your 3% mortgage home. You're also going to delay retirement moving.
That's the reason why, guys, there's not a lot of inventory, guys, on the market, is because of the fact that why would somebody sell their home and they're paying 3% right now? They may make $2,000, $3,000, $4,000, and $5,000 on the sale, but then graduate over to a 7%, 8%, 9% interest rate. And if they go conventional, you're looking at 9%, 10%. You see what's happening now, and having to go borrow that money, they're paying at a higher rate. That's crazy. That's the reason why you're seeing that combination right there. Okay, when it comes to homes not going on the market. All right, a home shortage, man. Let's keep going, guys. Let's go.
Moving to Florida, Arizona, or Palm Springs, and you're going to keep your home for, maybe we'll just wait a year before we downsize and move. That's happening. So the first thing has happened. There's not enough houses on the market. So and when there's few homes on the market, it's a shortage and prices go up.
Yes.
Now then, you've got 7% interest rates, but prices are up. So the home builders are saying, no, wait a minute. Inflation makes labor up to build a house. It makes materials up to build a house. But if Pat and I had a house building company, we would say, hey, Pat, prices are at an all-time high, and the Fed's not lowering rates probably for a couple of years. Pat, we could start houses right now because there's profit to be made because we're not going to be selling them at low prices. We're going to be selling them at high prices. Pat says, Tom, you're right. Let's see if we can get permits and open up another 100 homes and a little development to build. So the home builders are seeing high prices as an opportunity to build and make profits. At the same time, many people are staying in their homes, not selling them. So in my opinion, that's a bad move by the home builders, right? They are betting on we can make a quick buck really quickly by building properties because prices are going up, and it really depends the values, and it really depends on the area, guys, and the price point. What they're not telling you is the price point he's talking about is anything under $300,000. Right? Anything over $300,000, I even say $400,000 is not selling. It's still on the market for a long period of time. I promise you that. That's what he's talking about. Let's keep going. There's a variety of headlines going around in there, but the moral of the story at the end of the road is the housing market is constrained.
It is.
But builders see an opportunity to make a buck.
Can you pull up this?
And that right there, guys, that right there is what is going to really be curtains, I believe, for the builders that do it that way, because Deontay Ford, one of the best financial advisors, I'm gonna say wealth managers. My bad, Deontay. He's on Instagram. Didn't mean to insult you that way, brother. You are a wealth advisor. When he said record low inventory and rising home prices, bad combination. Exactly. So with that combination, what the builders are saying is we see, home prices are going up, so we can make a quick buck. Here is the variable they're not looking at but people are having to borrow that debt at a higher interest rate. They're forgetting that part of the combination. That's a bad thing. That's why I believe a build to lease scenario is a better play for home builders, guys. All right, man. And you heard what the Fed chairman actually said. The Fed chairman did say that he was going to raise the rates 2 more times, guys. 2 more times. Now, why would he say that? Let's keep going and see what they say about that. Now, here we go. Let's bring them back in to the fold, and let's go to what the Fed chairman talking about. Here we go. Let's go.
Up this link. This is Jerome Powell.
He's
talking about the interest rates. And one of the folks from Fox Business, go to 37 minutes and 10 seconds if you can, asks him a great question, Tom. And you have to see how he responds because right there, perfect. I want you to watch this. If you can, there you go. Watch this real quick with the question that's being asked of him.
Listen.
Thank you for taking the question, Mr. Chairman. Edward Lawrence with Fox Business.
Watch this.
So I want to go back to comments you made about in the past about unsustainable fiscal path. The CBO projects the federal deficit to be $2.8 trillion in 10 years. The CBO also says that federal debt will be $52 trillion by 2033. At what point do you talk more firmly with lawmakers about fiscal responsibility?
Listen to his answer.
Assuming monetary policy cannot handle alone the inflation or keep that inflation in check with the higher level of spending.
I don't do that. It's really not my job. We hope and expect that other policymakers will respect our independence on on monetary policy. And we don't see ourselves as the judges of appropriate fiscal policy. I will say, and many of my predecessors have said, that we are on an unsustainable fiscal path, and that needs to be addressed over time. But I think trying to get into that with lawmakers would be kind of inappropriate, given our independence and our need to stick to our knitting.
Yeah, but you can pause it right there.
Here is my interpretation. We can't stop Congress from printing. We can't stop Congress from printing. So they take care of their selves, and we take care of ours. Hence the word independence. Let's see what Patrick didn't say.
Right there. By the way, what an answer. He's right. But you know what he's asking him? He's asking him, all this work you're doing to lower inflation, but Congress keeps pumping out money into the economy. It's as if you're no needed. Like yes. Congress is telling Powell, yeah, everybody says you're the most powerful man in America. No, you're not. We're the most powerful men and women in America, not you.
That's correct.
The purse.
They can give you as much recognition as they want. As long as we pump money into the economy, the economy and the market's going to keep going up, and it's going to be.
That's modern monetary theory, MMT, guys. We can print away the inflation. That's what he's talking about.
Fine. It's like, this is not healthy. We keep delaying the pain that we got to go through. Nope, let's go into debt. Nope, let's go into debt. So as much as everybody is celebrating right now, this is going back, by the way, to all the realtors and loan officers.
Listen.
Congratulations to you. But guess what? We're going back to fake success again. So this time around, to some of the folks that made a lot of money and had a lot of fake success but didn't save it and you lost it all, this time around, instead of jumping into that Rolls Royce a little too early, wait 3 years. If you can make the same amount of income 3 years in a row and you start having some investments that are paying you outside of just your refinance and houses you're selling, get tighter with your own investments. I got friends that did it right. They're not affected at all. Matter of fact, they're doing great for themselves because they made the right investments. They're okay. But some of the guys that lived a fast life, they lost everything and they're in a bad situation. Unfortunately, I've been through this when I was in my early 20s and I made the money and I was like, boom, this thing disappeared. Wait a minute, what was this all about?
That's correct.
You got to learn that lesson. And last but not least, if there's more inventory, if there's less inventory, that means they're not selling more. Here's the other question, Tom.
Listen.
The same loan that I'm getting, if values are going up, that house was $400,000, now it's $700,000. $700,000, now $1 million. Did my income also increase by 40%? Has the median income in America increased? Is the average income, did we all of a sudden get a massive raise in our salary?
Sure did.
Are most people going to be able to afford these increases to buy those homes?
Not at all, because of the fact that people actually manufactured pay raises by borrowing more money on their credit cards. So they manufactured a pay raise by accumulating more debt, right? So now they have to go out and buy homes at a higher interest rate, right? So the cost of goods has gone up, the cost of services has gone up, and the cost of living has gone up, i.e. a loan for a house. It's time to begin to get a side hustle. Let's keep it 1,000. Let's keep going, guys.
I don't think so. So it's still going to be early on what to do with this. I know you have some thoughts on the economy. If you want to kind of go through your fear-greed index and kind of share with us your thoughts.
On that point, back-end ratios, you know what back-end ratios are when you're being evaluated for a loan. But a lot of banks had gone conservative down to 32, 35. And what we're reading now is banks are up to 40.
Ooh.
So,
man, prepare for a big credit pullback. It is on the way. It is on the way, guys. It's on the way. But we not done, y'all. You know your party got to bring it back in. We not done, y'all. Wait a minute. There's something else that happened. You know what? People say, I'll just run over to apartment complexes. We got apartment complex troubles now. Let's go. Let's go to the video for the people in the back row, y'all. Don't you worry. Your partner got you, man. Here we go. We got some apartment complex issues. Let's listen to it. It's real quick. Let's go get it in with the people.
Going on across America, and that is vacant luxury apartment buildings like the one behind me.
My man said vacant luxury apartment buildings. Vacant luxury apartment buildings. Let's keep going. Buildings, not units. Buildings. Let's keep going.
apartment developers have gone crazy in America. They're building nearly 1 million apartments right now in 2023. That's a record high. And what they're doing is they're building these apartments and then they're charging $2,000 a month, $3,000 a month, even $4,000 a month in some cases to rent the apartments, which of course is crazy. It's absurd. People don't have the money to afford that.
That's right.
What we're now seeing is a huge increase in what's called the apartment vacancy rate in America. Data
again, apartment vacancy rate. Now we have a question on Instagram that says, what's a credit pullback? What a credit pullback means is very simple. It means that banks will begin to pull back lines of credit. Back in 2008, a good friend of mine, a partner of mine, actually, in a couple of my ventures, he actually had $1 billion line of credit with Wachovia. $1 billion. What actually happened with that? Overnight, they cut that $1 billion off without any warning. Let's keep going.
Data from Apartment List shows that in many cities, there's more and more vacant apartments, particularly cities like Nashville, Las Vegas, Phoenix, and parts of Florida are seeing a lot of these vacant apartments just.
And most of those are Republican-led places. So it is not just in liberal places. You're beginning to see this also in red places too.
Sitting empty. And this is now forcing the landlords to have to cut the rent and in some cases give away 2 or 3 months free rent just to get someone into the building. And ultimately, this is bad news for the U.S. housing market because over the long run, the levels of rent filter through to home prices. And right now, home price to rent ratio is near an all-time high. So if rent is going to start to go down, that means home prices are going to go down.
Wow. All righty, y'all. Well, all right. Where is the economy going? Hear my thoughts, y'all. Yes, sir. You're correct, Blake, on Instagram saying bank won't give loan out as much. Exactly. That's what they call a pullback. It is coming. It is coming. I'm trying to keep it as 100 with you guys as possible. And now you're beginning to see it also in the apartment complex. And notice the greed. Notice the overstepping of the greed there, hiking up apartment unit price points to where you're paying $4,000 a month for apartments, guys. You can rent a full house, 5-bedroom, 4-bathroom, 2 living areas, 2-car garage. My God, for $4,000 a month. Now you're buying a luxury apartment for $4,000 a month. Yeah, and Blake, it's going to be bigger than 2008. Because 2008, guys, 2008 was just confined to banking, okay, and in insurance, and a small segment of the insurance, the AIG, things of that nature, right? And the real estate. Now it's going to be, and now this is affecting every industry. Every industry. And notice how a couple of weeks ago you had the Fed chairman said he's going to pause on a rate hike, right, to see what breaks. Now, 2 weeks later, which is this week, Fed Chairman Powell came back. He came and said this here. He said, well, we're going to raise it 2 more times. He showed the pivot real quick, didn't he? Real quick, guys. Man, I'm trying to tell you guys, it is time to look at a side hustle because of the fact that you just heard Fox Business that the reporter actually asked Fed Chairman Powell that question about when he's going to talk to Congress about basically being more fiscally responsible. In other words, stop printing so much money. My mans in them said, we're independent. They do what they do. We do what we do. So now, therefore, there will be no stopping of printing. Printing will continue. Will continue because they can't stop printing. They cannot stop. We cannot send our dollars across the seas because the countries do not want our dollars. They don't want the currency. They want our goods. And we are tamping down exporting of our goods and ramping up services. They don't want the services. They want our goods. Our biggest good right now is fossil fuels, petrol, oil, gas, natural gas. That's our biggest export, and we're exporting very little of that out. We're actually buying a lot of it from Venezuela. See what I'm saying, guys? Man, and guess who steps right in? China. I'm trying to tell you guys. What I'm trying to tell you is this here. It's going to get more expensive. Put that in your head. Burn it on your brain. It's going to get more expensive, guys. It is more expensive. Now, And you're right, Blake. Here comes a full. You're right. I did a Camu podcast on the central central bank digital currency, CBDC. I did that. Watch that, guys. Watch that. It talks about how China is plugging in that gap to where they're now the major exporter of goods, and we're now not. And that was done strategically. Now, so I had a question real fast saying, is it time to sell? It depends the price point. Right? I see you, Aaron. It depends on the price point. Some people, depending on the area, will buy over $400,000. They will. But just factor in that you're asking them to either pay cash. If they pay cash, they're going to want a discount. Or number two, go out and borrow that debt at a 7% interest rate. Now, if you're going to buy a house, I would say buy it now. Buy it now. Be okay with paying 7%. Be okay with that, right? I would really look at, guys, if you want to, if you can buy FHA, USDA, conventional with a lower down payment, I would do it. If you have enough income to sustain that, right? Or if that's not the case, just lease. Just lease. Just lease, because you heard them say the rental rates are coming down. Just lease. Just lease. But those that know how to find distressed properties, oh, they're coming. They are coming. A lot of them is here, okay? They are launching crypto. Yes, that is, as far as a Cruz, I see it on Instagram, as far as that crypto play, that's a big old distraction. That's a big distraction. If you don't believe me, just go to my YouTube or your Rumble or Facebook and look at last night's Countermove podcast. You'll see why I'm saying that. That's a big old that is a big distraction. That's all it is. My house sold for $400,000 VA. Loans are good. Yes, loans are good. Loans put like this. My partner Jason Hanna, check this here. He said, he has a saying, give me my stimmy. He has a saying, give me my stimmy. If you can stomach the payment and you want to lay down some roots, guys, buy your house and leverage as much as you can. If you have the income to pay that payment. That's my caveat there. If you have the income to pay it. Yes, Blake, you're right. Layoffs will be coming soon. The layoffs are already happening, Blake. They're already happening. They're happening, guys. So we don't have a roaring economy. We have a stagnant economy and an economy that's in decline. When you begin changing calculations for inflation to where it was 2 years and you change it to now 1 year, they're hiding something from you. They're gaslighting you. Okay? Period. It's time to put your big boy pants on. Now, guys, we actually had a master class, guys, real quickly. I'm gonna put this down here. We had a master class, guys, on Saturday, man. We had it was packed. We had a packed, great questions, got a lot of wise counsel. This is Jason Hanna, guys. Jason Hanna. He said Capital One laid off of thousands. Capital One just did this. Capital One. Okay, that's a bank. Laid off thousands. I was talking to another friend of mine yesterday who I'm a partner with. We're gonna partner from a mortgage banking standpoint. He let me know that some banks are letting some of their consumers go. Their customers go. They're pulling back. Y'all, it's real. It's real, y'all. It's real. But those that are ready are going to make a crap load of cash. Those that are ready. Why do you think that me and Cliff, we do this Real Estate Friday, guys? Why do we do this every Friday? Why do we do this? It's because of the fact that we want to get you guys access to information, principles, so you can then begin to learn the skills. Okay? Learn the principles, then graduate over to the skills. Once you learn the skills, that's when the money is killing it. So yes, I'm gonna put up there again, guys. Here we go. Capital One laid off thousands. Capital One. Okay. So Cruz said on Instagram, it is true the government owns, there's 76% of loans and that they're taking out. Exactly. Okay, let me speak to that real fast. All right. I'm going to spit that real fast. Guys, keep the questions coming on Instagram, guys. Wonderful questions. I'm put up real fast. Now watch this, guys. Cruz is right. What's happening is the Fed right now, who Chairman Powell is the chairman of, is expanding their balance sheet. They're expanding it. So what's happening is when money is actually made, guys, when money is made, it is actual debt. All right. There's a T-bill or bond made. They go over to the Treasury. Then what the Treasury does, the Treasury then cuts a check out, and presto, money is made. It's now debt. It's not debt. What do you think your banks buy? Your banks buy bonds to pay you money market rates. But the bond and Treasury bill market is crumbling. Goes why? Ain't nobody don't nobody want our currency. They don't want the bond. They want the goods behind the bond. If that makes some sense, guys. Okay, it's time to get big more pants on. Come on. But I'm saying this, guys, for you not to get scared. It's for you to understand what's going on and then counter move. Understand what's going on. Don't get paralyzed by fear and counter move. Your partner's got you, guys. So, guys, we had a master class. It was last Saturday. We're going to do it again, guys, in a couple weeks. No problem with it at all. Great questions, guys. But I wanted to roll this out to everybody real quickly here. In that class, guys, we actually offered our Cash Flow Club bundle. All right. That is all of our courses. Everything from how to buy a property in 90 days, how to locate a distressed property, how to buy subject to properties, how to build your power team. Every course and then some. And we're adding more courses every single month, guys. Is at your fingertips on demand when you want it, $99. Wow. We want to give you guys access to the principles and the skills so that you can begin bringing the deal. Look at the deals, bring the deals to the table. We can fund it for you, a joint venture with you as well, so that you can begin that side hustle. Okay? Begin the side hustle. It's time. It's time. At the end of this year, after what the Fed chairman said, it's going to be a completely different economy. Completely different. Banking on down. Let's keep it 100, y'all. It's time to stop playing these games. That means less time on IG when it comes to shooting the breeze, more times reading the book. Less time on IG or Facebook shooting the breeze, getting on the phone line with a wealth manager and beginning to get your affairs in order. I'm saying this, guys, because I'm in these rooms. Guys. I'm in them. And I'm seeing what's coming. So again, guys, we're gonna have a new master class. Okay, we're gonna get that scheduled again, guys. We're gonna go a little bit deeper, guys. We had one on last Saturday. It was phenomenal. But anyways, guys, we made this available to them. The Cash Flow Club bundle. You can now get available to it as well, guys. Easy peasy. All the training you need, $99. Everything, $99. And we're adding more courses every single month. Well, guys, man, that's really all I realistically had. Do you have any questions at all, guys, comments, or concern? If you want this bundle, if you're on Instagram, guys, just go to the link in my bio. It's right there. Boom. If you have any questions, DM me. You know what I'm saying? No problem with it at all. And but that's all I have for today, guys. Well, man, thank you so much for your time. Do you have any questions at all, guys, on all platforms before I log off? Let me know, guys. Any questions that you got for me? I'm looking on Instagram real fast. It says, would love to have my money from my birth certificate and social security card. That's a different discussion. That's a different discussion. But I'm rocking with you. But guys, man, thank you so much for your time, guys. God bless you. And one thing about it is you'll see Cliff next week. He'll be back, guys. We are closing on a lot of transactions, and I actually owe one of my partners a phone call because I'm looking at apartment complexes in Michigan as well. Now, here's a good thing about it: the 5 apartment complexes we talked about in Michigan on a Big Ten conference campus. They're back at the table now. I told y'all. They always come back because people are getting a little bit too greedy. That's okay. We the right ones. But guys, thank you so much for the live, guys. Thank you so much for your time. God bless you. And you know how I ended every single time, guys. I always say this here. Before you leave, and while you can, and don't get mad at me because I look better than you. It's okay. Take that damn picture and give it to your mom and them. Now say it with your chest, guys. Holla at your partner. You guys have a phenomenal weekend. Don't party too hard. And holla at your partner. Peace.
God give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.